Please welcome to the stage our next session's moderator, Ryan Bozarth, co-founder and CEO of Dakota, joined by today's panelists, Atik Bana, founder and CEO of Actual, Hugo Finkelstein, co-founder and CEO of Rise Payroll, Ronak Daya, head of product at Paxos, and Chintan Tarakia, head of Coinbase Wallet at Coinbase.
Thanks y'all for coming. Appreciate it. We're going to kick off with a few intros here and then jump into some questions. Okay, first off, Atik, kick off for us.
Thanks, Ryan. Hey everyone, I'm Atik, co-founder and CEO of Actual. Actual helps businesses pay and get paid the way that they want, either in stablecoins or local currencies, while their counterparties can pay or receive in what's easiest for them. Built on top of kind of the emerging payment infrastructure, the best of fiat and stablecoin orchestration. And then what we do is we layer on the more mission-critical, kind of business-critical component of accounts payable and receivables. Prior to this, I built payments and accounting products at Stripe. Really excited to be here and chat more.
Hey guys, my name is Hugo Finkelstein, co-founder and CEO of Rise. So Rise is a global payroll and compliance platform. What we do is help companies of all kinds, Web3 or Web2, onboard, hire, and pay workers, whether they're domestic or international, whether they're contractors or full-time employees. Take care of all the HR, the compliance, and all of that is built on top of the payment infrastructure that we've built, which is hybrid in fiat, stablecoins, and crypto. And basically what we do is help companies pay those workers in whatever currencies they want with whatever currency they have. And we've been at it for a few years, and today we help hundreds of companies pay thousands of workers on a monthly basis, and that's our contribution to the stablecoin world.
Awesome. I'm Ronak Daya. I'm the head of product at Paxos. Paxos is a blockchain infrastructure company that's focused on tokenizing assets and then providing utility of those tokenized assets. We issue stablecoins, and we have the largest tokenized gold product. We issued stablecoins like PayPal, stablecoin PYUSD, and most recently launched USDG backed with Global Dollar Network. And on the utility side, we power crypto trading for companies like PayPal and IBKR and offer stablecoin payments for companies like Stripe, MasterCard, and others, sort of bringing it all together into a one-stop shop.
Awesome. Hey everyone, my name is Chintan. I lead engineering for Coinbase Wallet at Coinbase. I probably don't need to talk, I think everyone knows what Coinbase does. But at Coinbase Wallet, what we're really focused on is building like a really dead simple, amazing, and delightful consumer experience to bring users on chain. And a lot of the energy and efforts we go into is really around like, what are things people can do on chain? Stable coins and making payments being one of them. So we've been building the wallet, we've been scaling it out, and we've also started kicking off efforts around bringing small business merchants to accept crypto. So you can go and pay for a coffee, but pay with stablecoins.
Beautiful. I'm Ryan, I'm your moderator today. I lead a company called Dakota. Dakota is a crypto integrated financial account for businesses. We operate as a bank-like account for businesses around the world. Today we'll be talking about real-world use cases for stablecoins. And is it all just crypto trading, or what's actually happening out there? How big are the use cases? Where are we today? And then where are we headed? So with that, let's jump into it. So the first couple questions we have around are the real-world use cases that exist today before jumping into the future. So the first one we have here is, what's the most compelling use case for stablecoins you've worked on or seen? And then Hugo, let's kick off with you.
Yeah, I mean, obviously I'm biased, but global payroll is definitely something that we see is getting real adoption outside of trading and all these use cases. And it's really, there's within payroll, different use cases. The first one is you have companies that are in the space that have treasuries in, say, USDC or USDT that are trying to automate all their payments and don't have the tools for it. They have workers around the world that want to get access to US dollar, and today it's the easiest way and most efficient and cheapest way to send money, to send USD is through these rails. And then you also have the Web2 companies that have nothing to do with crypto that have these workers in those jurisdictions that are asking for it. So we help them with that. So yeah, very compelling use case.
Yeah, interesting. Anything we should add?
Yeah, I can think of a bunch, and I'm looking at the prompt. I do think that stablecoin today there's a large portion that's trading, but we're starting to see the beginning of broader adoption. For us, we partnered with Stripe to enable merchants to accept stablecoin payments. these are US merchants today, but it's been, the way it works is if you were a Stripe customer, you can go on your dashboard and enable a toggle and start accepting USDC and USDG. And the day we launched, we saw payments from 70 different geographies and 70 different countries for US merchants on the first day. And that power of like enabling merchants now to be able to accept payments globally with one click and get settled in fiat or keep their balances in stablecoin is really cool and shows the future potential. I do still think that stablecoins and people wanting to pay in stablecoins is still limited to certain industries and certain geographies where stablecoin supply is abundant. We saw, where we continue to see traction is in like things like gamings or in South America and LATAM countries where people are holding stable coins and want to be able to pay with it and find value associated with it. But I think that's, we're still in early days, but that points to how stable coins enable global adoption with a single click.
Yeah.
I have one, I think that's like a little bit off the beaten path, but pretty important. It's actually like using stable coins to pay for attention. So like if you think about like any social media that you get on, you like stuff, you bookmark it, whatever, Instagram, TikTok, etc. But I think what stablecoins unlock in both of your examples is the ability to pay across borders instantly with no fees. And now you bring that into the construct of a social media app where you are scrolling and the creator is actually seeking attention, and you can reward that creator by, if you like something, just push like a penny over, right? Like stablecoins actually unlock the ability to give micropayments for real at global scale. And we've seen these experiments play out where creators are posting on traditional Web2 platforms versus on-chain platforms. They're making on the Web3 platforms like 3, 4, 5x the money in half the time. So I think stablecoins actually unlock a really good like a payment mechanism for attention as well on these platforms.
Yeah, 100%. Next up, so how are companies using stables for payroll, vendor payments, or savings? Who wants to take this one?
I can kick off.
Let's go.
I mean, it's certainly, I think we've heard some of the stories of how a business will, in America, pay out its stable coins, and then the recipients in an emerging market where the stable coins preferred against, compared to the local currency. Same with payroll. I think there's a lot of really strong examples, and Hugo can probably speak a lot more to it. But I think the more general kind of point that I wanted to talk about was how in a lot of these use cases with, vendor payments, payroll, and savings, what stablecoins are really is sort of a better coordination mechanism. If you think about how kind of cross-border payments happen generally, right, it's SWIFT and cards, and those are systems that we've agreed upon over years that these work. Like I'm willing to send you a payment via Visa, and you're okay at receiving it. But what we're finding is that obviously there are some trade-offs, with regards to speeds and costs, where stablecoins can actually be used. I don't want to necessarily say creatively, but there are some really interesting ways that you can stitch them together to work really nicely, where you might be a business in a place like Argentina or Brazil where paying out in a stablecoin is actually a lot easier for you, whereas the person you may be buying from may be an exporter in the US. If you could send that stablecoin and they can receive the vanilla dollar, that's a great use case in a kind of way that we accomplish that coordination. One other example, which is more of the stablecoin sandwich that we often hear of, Nigerian, importer buying from someone in China, they can pay with the local currency, go to someone like Yellow Card to swap that for a stablecoin, and then they can swap that stablecoin for yuan, so they can settle and bypass SWIFT. Again, another example of where we can create coordination, kind of different from how we previously done it. And so I think that's the really big unlock and why we're starting to see these use cases across things like vendor payments and contractor payments, et cetera.
And just to add, +1 on everything that you said. On the payroll front, what we're seeing is they use stablecoin to pay people around the world, but as a result, they gain leverage over these workers, and in terms of like attracting them, retaining them, they're now able to pay them, without fees, whereas like if they were to use fiat rails, everything there will be so many more hurdles to it. So we definitely see this wave, especially now with regulation coming, this wave of companies that are not interested in learning more and using them, and as a result, looking like a company that's pro-innovation and attracting younger generations of workers.
And Chintan, one question for you. What merchant use cases are actually succeeding with Coinbase Wallet? Give us a few examples.
Okay, I love this. Because, I don't know, I think there's obviously a lot of talk about stablecoins and its benefits. But my spicy take is nobody cares. It's money.
Yeah.
And so how do we convince people out there not to think of it as crypto, not to think of it as some special term like stablecoin? It's money, but it has so many more benefits and primitives. So with Coinbase Wallet, part of the push to bring people on chain is don't push crypto in front of their face, but just give them the use case and the benefit and the feature. So the use cases we've been starting to unlock with merchants, I'll give 2 or 3. One, last summer, we do this thing called On-Chain Summer, and we bring thousands to millions of users on chain. They try different things. Part of that was actually going and onboarding about 15 to 20 coffee merchants throughout the US and some international as well to accept USDC. And we did a very simple thing. No one off the street is going to have USDC or a wallet necessarily. So the one problem is how do you actually onboard them? So we put up a QR code, they scan it, they download wallet, they get a little NFT, and that unlocks a token gated, unlocks a free coffee for them. Cool, that's step 1. Step 2, we hooked up all these merchants with a mechanism to accept USDC. And users don't have to pay for gas, we cover it all, it's seamless. And so then they would go back and they would then have a $1 cold brew. And we did that all summer long. And what we would see and learn is after the 3rd time someone goes and pays for something with USDC, it starts becoming a habit, right? And they start understanding oh, hey, this is cool, it was fast, I'm getting some added benefits. In Coinbase Wallet, if you just hold USDC, you get 4 point something %. But what we really see with merchants is there's a category of merchants that are I've heard of crypto. I didn't know I could actually pay for crypto. This is incredible. I went to my tailor, real story. I went to my tailor 5 weeks ago. This man, his name's Anatoly. He's from the Ukraine. And I was buying a suit. And I say, hey, can I just pay you in crypto? He's like, what did you just say? So I said, I want to pay you in crypto. Do you take crypto? He's like, I've been waiting for this moment for 7 years. He, the look on his face was I didn't know you could do this. And I literally, this is how much I obsess about it with merchants and helping them understand, it is very easy to get set up with crypto. So I got Anatoly, his whole tailor setup, accepting USDC in 30 seconds. He got a wallet, I printed it. I literally carry a QR code printer in my backpack to go and onboard any merchant I see. And Anatoly loved it because he's like, this is amazing. Because suits are expensive. No one wants to pay the 3% whatever fees and any other things. And so merchants want to hear the benefits. How am I paying less fees? How will this drive more demand from my customers? And is this easy to set up? And so far, a lot of them are actually very, very open to not accepting crypto, but to actually having a better form of payment.
Let's spend a little more time here. So you mentioned a few things. You mentioned the benefits. We can talk about education as a category. I think UX is another one. You also mentioned some of the benefits specific to, in this case, Coinbase Wallet. We've all seen kind of regulatory changes happen over the course of this last year or so. In the eyes of the merchant, where do we think we have the most room to push, or where can we make the most improvements across either those 3 dimensions or something else we haven't mentioned yet?
I'd say, I fully agree with the idea that you kind of have, if this is going to see large-scale adoption, you're going to have to abstract away and then sort of soft land them into a version of a modern dollar. I think stablecoins being called crypto is a disservice in itself, and we all will. I don't want to come up with a new name here, but maybe we should. Money. I know.
It's money.
Crypto money. No. So I think the idea that the sort of necessary conditions, as Chintan started pointing out, are better UX, clear incentives, trust and regulation or safety, and And I think those largely get you there. They come in different forms and different businesses. We're talking about merchants. Merchants is a very specific use case, but I think that applies globally to any business that wants, or consumer that wants to interact with this new system. They need to know that their money, today when you put your money in bank and you have it on your credit card, you know that it is safe, that your dollars are not going to disappear. And I think there's a little bit more work to be done for us collectively to enable that. And so trust gets passed from clarity of regulation and clear frameworks to then to like companies like Coinbase and Stripe and others thinking about how they're passing that trust down to their customers, because people don't want to hear about asset A versus asset B necessarily. They want to hear on, is this a name I trust, and are they like using it? Do they hold their own money in it? Do they offer payments through this? And if they offer payments through this, then they've done the work, and I can trust their brand. So the trust comes in that way. User experience you touched on. And I think user experience, we talk about user experience from the consumer perspective, but there's user experience for businesses. How do you meet them where they are and enable them to start interacting and accepting this with the lowest barrier to entry?
Yeah.
And then the last one I would say is the benefits. I think the benefits in terms of like lower cost payments is a clear value proposition, but the benefits also need to come to all the different businesses that want to leverage stablecoins. They need to be able to not only get better rails and more instant transfers. I think it's important to remember the last 10, 15 years of fintech was just built on like Scotch tape on existing broken rails. The fact that I can send you money via Venmo is great, but there's a bunch of pre-funding and ledger movements that are happening that all get abstracted away. That becomes increasingly untrue in the global nature of payments-based, like internet-based payments. And so the businesses that need to adopt and drive adoption of it and abstract it away need incentive. And so you need trust, you need good UX, and you need incentives. And that's been a lot of the thesis behind what Paxos has been building and how we set up Global Dollar Network, with the idea that all businesses are going to want a stable coin, and they're going to want economics, they want an asset that they trust, and they want infrastructure that gets them started in a very easy way.
Yeah. One thing you mentioned was this idea of meeting them where they are, and whether it's businesses or it's individuals. I think you hear a lot of stories. I think the Coinbase wallet in the coffee shops is a fantastic one about people kind of going to either the business or the individual. Any other experiences you guys have or have heard of the industry that really kind of resonate with you when it comes to meeting the individual or the business where they are?
Yeah, one interesting one. Just last week, we onboarded a coffee exporter from Kenya. It was pretty interesting because he found us, and he'd made an invoice. He got paid in USDT, and we're like, wait, there's a coffee exporter getting paid in USDT, and ended up getting on a call with him. And I guess we learned a couple of interesting things. I mean, first, he didn't want to off-ramp the USDT, so that he could use the USDT to like pay some of his suppliers and actually kind of hold it as treasury for part of his business. But meeting them where they are, the thing that he actually was really excited about and why he came to Actual was that he wanted the integration into QuickBooks. And we're like, well, tell us a little bit more. Like, what is it that you're specifically looking for? And he kind of shared that, with coffee, he's got this inventory, and he needs to be able to attach that inventory to the sales, so he's never kind of overcommitting what he's selling. And then, the last part was also the fact that, he himself wants the USDT, but he's often selling these goods to people that maybe can't pay in USDT. So again, meeting them where they are, we can enable him to accept dollars, euros, and other types of currencies or stablecoins, while he can always get that, type that he wants. And really in the end, it's sort of like, kind of going back to more than just the money. It's like, sure, we help him get what he wants, but we tie it to something that's so much more important, which is that disciplined kind of inventory financial operation that he runs, where, kind of this Western mindset that we can sometimes have, where we're like, oh, just because you're not a Delaware C Corp, you still need a lot of these types of primitives. And so, payments, sure, but then financial operations is what really kind of ties it all together.
I think there's like a very, very simple way to think about how to meet the merchants where they are, which is just very simply, anytime, doesn't matter what it is, Starbucks, Sweet Greens, Mix, wherever you go, just ask, hey, do you accept USDC? Do you accept crypto? Even if you know damn well you're going to tap your phone and pay via credit card, just ask. Because the more and more you ask, the more and more you end up learning. Like, oh, is it actually the staff that's not aware, but behind the scenes they do accept it somewhere? Or if it's like a small business, does the business owner even realize that crypto is a thing? And I think the more and more you just ask and get out there and really try to understand, like, is this a consumer perception problem? Is this an awareness problem? Like, we fixed UX. UX is pretty damn good now. We have tap to pay in Coinbase Wallet. Everything's gasless, it's fast, whatever. The consumer side, ask them. And many times we hear like two sides of the coin. One is like, I think like in Atik's case, that coffee exporter owned the entire business. And so had all the flexibility to change in and out what they wanted in terms of payment acceptance. And then the other types of merchants are the ones that are sort of handcuffed by large payment provider companies that they have like terminals and they've like locked into contracts, and then they keep getting these upsells, right? Like accounting reconciliation, which was free on year one, is now 200 extra bucks on year two. Like they're just locked in. And that category of merchants is very hard because they absolutely don't want to get locked in like that. They don't want to pay for the hardware, but their entire business operation runs on it. And so that's like the moat to get through. And so like we see a lot of these stories, and that's why we also like started this website called acceptusdc.com. You go there, you can onboard yourself as a business, and it takes like 10 seconds, and we ship you all the sort of merchant kit you need. And it's just a QR code and a P2P payment. But like if you just put it out there and say, do you accept USDC? Do you accept crypto? I think you'll be like really pleasantly surprised how much you'll learn.
And just to add to that, I think like totally agree with what you said. Like the collective work we need to do is this network effect of stablecoins, where like today I get my salary in USDC. Can I pay my rent in USDC? Can I pay back my mortgage in USDC? Like once we add these new nodes to the network, that's when I think the adoption, like the real adoption, will be unlocked, at least for the consumer wave.
I guess question for you, Ryan. You've built banking for people. Do you talk about stablecoins at all, or do you just say better banking?
So we do both. So we'll talk about stablecoins to the extent it's helpful in terms of communicating the value proposition, for example. But back to the point of like, this is just money, a lot of times we talk about fast global payments. And so the idea is, hey, we're not here to kind of like really sell you on a stablecoin solution or pitch you on that solution. We're here to tell you about the fact that you can move money around the world in seconds, not days. And then we'll oftentimes go, and here's how we do it. And so we have that kind of transparency. We kind of value the ethos of the industry, being able to verify, be transparent, those type of qualities. But it's not the pitch. The pitch is the value proposition, in our case, to the business, that it's all about fast money movement or global money movement. It might be the ability to access treasuries outside of the US. But those are things that really matter to folks. It just so happens that the crypto is being served as infrastructure or as a facilitator of those value propositions.
And I think that's, to me, is like the summary of like what meeting a customer where they are means, which is that if you're going to go sell them on the value proposition of stable coins, and you start with why stable coins are better, you're kind of like losing the game already, I would say. You want to start with how can this enable you to do what you're doing today faster and better or cheaper? And I think most companies are open to listening to it, listening to that version of the pitch. What's been interesting from our perspective is that we've operated and built like regulated infrastructure for enterprises to be able to either leverage this for themselves or offer it to their customers. And it's been a really big shift in the last few months, even I would say, like as US regulation and clarity comes in, where instead of us trying to go sell and do 18-month-long pitches, people are like, how should I use this? It feels like there's a way to make this better, and I can integrate it into our systems. And I think we'll see a large sort of wave of adoption through this year and the next few years as we get more clarity and there's clear incentive alignment.
Yeah, I also think like the flip side is all of us speak and pitch the usage of stablecoins as if it's obvious. And to everyone else outside this room, it is not obvious.
Yeah.
And we also have to remind ourselves, like, you know, many businesses are just like, I don't care if this saves me 3%. I don't care if this is better. Am I going to make more money? And that's it. And like the cost of integration, ripping out their existing systems, all of that takes time and money. And so I also feel like we try to convince merchants and people to accept it by, you know, talking about the merits of stablecoins. I think we just need to get right to the heart of it. How is it going to make them more money? And like we don't spend, as an industry, I don't think we spend enough time thinking about driving the consumer demand flywheel.
So one part of this conversation we've been touching on was basically how much crypto is treated as infrastructure, how much it's on the forefront, whether we're kind of onboarding folks directly to it. An ongoing conversation is like, what level of abstraction do we have with stablecoins? Do we hide them behind something like a stablecoin sandwich? Do we kind of really promote the values and bring them in the forefront? Where do you all sit on where the level of abstraction should be for stablecoins and stablecoin usage?
I had a tweet about this earlier this week. And it might be a contrarian take, so I'm curious how you all react to it. But yeah, this idea that like stablecoins kind of fade into the background, at least from what we see, right, it's sort of a take that you can see if your users are in San Francisco. But in a lot of the cases that we see when we're serving users in Bogota, in places like Lagos or in Dubai, like people want USDT. Like they're asking for USDT by name. It's almost like the brand of dollar that they prefer and want. And so if that's the case, I think we should call it what it is and show the user that dollar. But in other cases where it can be abstracted or it's not necessarily the means to the end or the settlement currency that people kind of desire or you know, want, then you kind of hide it. So I think ultimately we may be moving into a world where kind of a lot of these kind of diverging preferences and need for flexibility is only going to get more and more bigger. And instead of kind of forming a strong opinion one way or another, we just continue to meet users where they are.
I think what we need to abstract is the crypto element. You know, like the blockchain addresses, the wallets, signatures, the transaction confirmation, et cetera. Even the testing transactions, like we need to abstract all of that for the users. But then, yeah, like the types of stable coins, like at the end of the day, it's like me choosing between euro or pound or dollar, you know. So abstracting the crypto element is needed, in my opinion.
I generally agree with Atik, which is that it depends. And it depends where, you know, we talk to the large FIs who are like, I'm not showing this, I'm going to show it as a dollar. Why? Like, people trust my platform and they want to see a dollar, and a sandwich makes complete sense, or like an abstraction layer makes sense. And I think that's okay, but there are people who want to participate in DeFi, and you're not going to call it a dollar in DeFi, you want to call it what it is. Or in other countries where there's demand for US dollars and people, you know, we can all sit here and both of us have very strong views and different views, and maybe it's all a spectrum on USDT, USDC. I'll talk about the benefits of USDG, but you know, the reality is that it's dollars on chain, and dollars are inherently more stable and more beneficial in a bunch of parts of the world where people want that and they want a version of a dollar instead of whatever local currency they have, and showing them that is really useful. And so I don't think there's a solution that fits all, but I think increasingly as we get past this, you know, early adoption curve, I do expect that they're going to start to, you know, Chintan's point at the beginning of this conversation, these are just dollars. They're just a version of dollars, and increasingly they'll start to look like more like just dollars across the platform.
Yeah, my take on abstraction, I don't think we need to abstract at the crypto layer anymore. I actually feel like the UX is there, right? I actually think the level to abstract is how fast can you deliver the benefit to the merchant, and how fast can you deliver the benefit to the payer. That's it. That's the only thing that matters. And I think we forget sometimes, at least on like Ethereum networks, like a stablecoin is fully programmable, right? You can do anything and everything with it that you want. And it's like, it's incredible, the primitives that are available. And so like the level to put intense obsession on is what does the merchant need, what does the payer or the consumer need, and like how do you deliver the delight and the use case. They want money, they want to use it, and they don't want to lose it.
Yeah, I mean, that's a great way to like frame it. I think the programmability of stablecoins actually is really beneficial to explain why it is cheaper and better. You pay intermediaries a bunch of money to verify who the receiving party is, the sending party is, to deal with the pre-funding that exists, to deal with the fact that there's no settlement that's happening 24/7. All of that, if the fact that I can monitor transactions and in a regulated asset, season freeze, makes it easier for me to be able to deliver that value proposition in a much cheaper way. And we still, have been focused on bringing dollars and making them one for one on chain. But we haven't even scratched the surface of what programmability of stablecoins looks like. And I actually think as you get past the initial adoption curve, I think people are going to do more interesting things in programmability of it, where showing the fact that it is crypto and it is programmable is actually beneficial.
Yeah. I think something to like, I think we're using the word programmable as if everyone it's a thing, right? Like a very simple use case of why stablecoins are useful and why merchants and payers cares. Many merchants don't want to touch tips. They just don't want to touch them. They have to deal with taxes, they have to deal with payouts, et cetera, right? You can program like the infrastructure in such a way where if I pay for my $10 coffee and croissant, and there's a tip there, it automatically gets streamed in on settlement to the staff's wallets, right? And so the merchant itself never needs to touch it. They don't need to deal with taxes. The staff people deal with it. That is an incredibly powerful use case. We've heard merchants ask for a lot, right? And that's the beauty of programmability here.
100%. We've talked a bit about merchants, so we're not going to ask you about institutions. As you talk to institutions, what are the use cases and the demands you see these days for stablecoins?
Yeah, I mean, I think when we have institutions coming in, they are coming in for one of two things, I would say. They're seeing demand for, it depends on what kind of institution that you are, so it's a broad term, but I think the challenge that most businesses face in some way is that they are all holding and moving money across the world to run their business. That's the crux of the problem. And it depends on how you do it and what access to global banking rails you have today to then you take that and say how beneficial something like this could be. I think I always start with, a lot of companies come with they're somewhere on the adoption curve where they have thought about it and have a clear use case that they want to come to, or they're like, I heard about this thing called stablecoins, what should I do? And more often than not, consumer-facing use cases or business or end customer-facing use cases are a hurdle too far as the first step. I think that's starting to become less true as people are seeing clear value proposition in different places. But I think the most clear, obvious use case that companies just want to get started on today that we're enabling across the world is on just moving money between their own systems. Businesses all day are moving billions of dollars across a bunch of different corresponding banking rails, trying to deal with pre-funding and settlement, and trying to contort themselves to deal with the fact that you can't do this 24/7. And solving that problem on day one is a very clear, easy way for businesses to start seeing the value and then use that to start holding stablecoins. And now you're holding stablecoins, you're earning interest on them, you start to put your own money into it, and then it turns into a journey of why wouldn't I offer this to my customers? If I trusted to hold my own money, I should pass that trust down to the customers. I think that's typically the journey, but it obviously varies on where people start on the spectrum.
The question for you. So you've talked a little bit about this, but using actual as a real life example here, how is settlement of stablecoins becoming meaningfully easier than things like ACH and wires?
Yeah, for sure. I mean, especially when you think about the fact that stablecoins enable this like near instant payout, it's great. But ultimately, what ends up happening is that now you need two parties to say, hey, I'm going to pay USDC Ethereum, and I'm going to accept USDC Ethereum, which is often not the reality. And in the case of USD and ACH and wires, obviously there's kind of a limited coverage in terms of who can be sending and receiving money within those railguards. And so really, I mean, the unlock is the fact that now, again, we have this coordination that we can do between two businesses or two counterparties, and stablecoins enabling a really unique way to achieve that. We're a business in Africa, for example, work with a lot of folks in Nigeria, like freelancers and different agencies that actually want to receive payment in a stablecoin, but then they're sending out these invoices on actual where the clients can pay in an ACH or a wire. And here we are able to now make that payment happen, which, in some cases, there's one example, we had a user who was getting paid into his friend's PayPal account in the UK, and then that friend would send it to another platform to convert it into Nigerian Naira, and then he was sending that Naira to his account, and then from there, he was actually converting some of it to stablecoin because he paid some of his employees in stables. And this is a process that was taken 3 weeks and upwards of 5-6%. So, yeah.
Yeah, it's a lot of steps and a lot of money. Okay, Hugo, from a payroll perspective, a question for you now. What's holding these companies back from switching?
I think there's multiple things. The first one that we touched on is regulatory clarity, because that unlocks financial institutions like banks and a lot of big traditional enterprise that have large compliance or legal teams. They're like, we don't want to start paying our people in crypto because that means our bank will stop servicing us. That's the first one, but that's going to change. The second one is still on the regulatory front, but more on the HR side of things. Can I pay people in crypto or in stablecoins? And every single jurisdiction has different rules around it. So sometimes the employee has to opt in for it. The other time, the minimum wage has to be in fiat, and then the rest can be in stablecoins. So these companies need to learn, and they don't want to learn when they have global workforces what every single jurisdiction is saying. So they need tools like ours, which tells them you can do this and that, and provide the guardrails for them. Education is huge as well. We speak to a lot of traditional companies that are telling us, hey, but if we are to pay people in stablecoins, how do we verify that they own their wallet? All these processes, and how do we integrate that system or that wallet verification system, for example, within our current HRIS, like Workday. So educating on that front and helping them do that. And the last one, which I think will be the biggest driver, is actually the pull from the workforces. The younger generations that are entering the workforce becoming more and more important, that are okay getting paid in stablecoins and spending it and using it, demanding that from their employers. So employers, traditional companies realizing that they can attract and retain these demographics and be more competitive in the hiring market will be a big driver.
We've mentioned regulation a few times and kind of the need for more continued regulatory clarity. We have some changes happening here in the US. We've seen some in Europe as well. But what do you guys think happened this year in terms of the actual regulatory clarity we need to make the progress they want, and where do you stand on some of the things that are in flight today?
I think regulatory clarity of how old stablecoins are utilized and what it means to issue and run a stablecoin will go a long way. But I think it's important to remember that there is legislation today that exists in the world and exists in New York and other jurisdictions. Paxos has issued stablecoins since 2019 in a fully regulated way. I think the basics of regulation that you want to make sure happen across the world, and again, we've seen progressive regulation frameworks in countries like Singapore. In Abu Dhabi, MICA has come out with clear regulation, and we issue from all of those places. It seems like a really painful thing to do, and it is in some ways, but the reality is that a lot of these legislations all have common practical frameworks that we've helped draft in a lot of cases that provide consumer protections and protections for businesses. Stablecoins work in the ways and are equivalent to money if you can always trust that you can get $1 back. That's it. But what it takes to get $1 back on the other end has a lot that goes into it. You want to know where the reserves are managed, how they're managed, how the operational processes work, who can access what, how do the interconnectivity between fiat rails and stablecoins work, and then what is the tax treatment and accounting frameworks associated with it. And I think the Genius Act that is in sort of passing out of Senate has a lot of the common sense frameworks that we've seen in other jurisdictions, and what we operate under today being regulated out of NYDFS and the MAS in Singapore. And for us, this just levels the playing field and ensures that larger FIs and corporations that have sort of held back because of some uncertainty get the protection that they need or the assurances that they need to now not sit on the sidelines. So I'm really excited. I think we'll see some clear frameworks. I'm optimistic that we'll see some legislative action this year, and that there's still challenges. The beauty of stablecoins is that they're global. The thing that I suspect that we're going to continue to see is that each jurisdiction, to some extent, wants to protect its local currencies and doesn't want to dollarize the world, and so we're going to see patchwork frameworks come up across the world. And the thing that we're looking for and advocating for is how these frameworks work with each other, because there's, again, across all of these different frameworks, there's a baseline level of common sense that all stablecoins need to operate with, that still benefit and make them interoperable across the world. Because what we don't want to do is bring in legislation and then have to have a version of a stablecoin in the US, a version of a stablecoin in Canada, a version of the same stablecoin in Europe. That benefits no one and takes away some of the value proposition that we've all been discussing.
Yeah. So we have just a few minutes here to wrap things up. One last question for each person. What is one myth about stablecoins that needs to die? Everyone's got 30 seconds to give a response. Who wants to kick us off?
I can start. I guess I'll just build on my last one, that stablecoins just fade into the background. I don't think that happens.
Stablecoin maps on LinkedIn are a big myth. I think there's a lot of them, and the myth of if you're not on one of these maps, you're not going to make it. But no, realistically, I think it's the timeline that we have for stablecoin adoption. I think we're seeing, in my opinion, a very short term, but we have to think in decades. I think real adoption and truly mass adoption will come in decades, not just a few years.
I think there's a general perception that all stablecoins are created equal, and I think that is, I wish that were true, and hopefully legislation will make that true. But I think we need to do better education on what the right ways to operate and run stablecoins are. So I'll pick that.
Stablecoins are not crypto. It's money, but better.
I like that as our kind of parting gift from this conversation. Appreciate you all for the time spent together in the discussion. Got a chance to cover a lot of ground in terms of what we see out in the market today, what's missing still, how we view on regulation, where we're all headed. So thank you all, and thank you all for joining us. Appreciate it.